Welcome, everyone. I'm Mike Brashazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome back to another exciting episode of the What Matters podcast. I'm your host, Mike Brashazadeh.
And I'm Ashley Ward.
Today, we're thrilled to welcome a very special guest, Dino. I hope I pronounced this right. Is it Pihakis?
You got it.
Well, with a last name like Brashazadeh, I was hoping I'd get that right.
Partner today.
A partner at the LiveOak Group at Strategic Financial Partners based in Birmingham, Alabama, Dino has been helping individuals and families navigate their most important financial decisions for the last 20 years.
Alongside his team, Dino and his team manage approximately $340 million client assets. He brings a deep sense of purpose to everything he does, both in his practice and his community. From his work with the Greek Orthodox community and AHEPA to his involvement in organizations like the MS Society and the Auburn Alumni Association, Dino leads with service and heart.
Good morning.
Good morning. Hey, Dino, can I ask you a question? With the MS Society, is that multiple sclerosis?
Yes, it is.
So, my father had multiple sclerosis. So what brought you into that society, if you don't mind me asking?
Yeah, it's a great question. It's probably 10 or 15 years ago. I can't remember the exact date. I was asked to be on like a junior executive board. It's a thing they do each year. It's one of their fundraising activities. And then the real personal reason was there's a family here in Birmingham that we were very close with as part of our Greek community. I am somewhat related to them by marriage, and they have two kids right around my age. They're not kids anymore, but both of them have MS. And one, Suzanne we're almost the same age or same grade in school. And she was diagnosed I think we were in college, and then her brother was diagnosed maybe 10 years or so after that, maybe 15 years or so. So it's something close to home to me. So I try to participate each year in some of their events, and I'm still on you stay on that executive board after you've been chosen. So it's a cause that I think is worthy.
Yeah. Thank you for sharing.
Yeah, that's fantastic. Well, Dino, thanks for sharing that story right away. And thanks for joining us on the show today. It's a pleasure to have you with us.
Yeah, it's a pleasure to be with you guys.
Well, Dino, let's jump right in talking a little bit about your professional journey, if you would. So what really led you into this industry in the first place? Starting the financial industry, could you start a little bit about your backstory there and where you are today?
Sure. So I grew up here in Birmingham, went to Auburn University, War Eagle. Lived in Colorado for a few years after that, came home, worked in the restaurant industry for a little over a year, had some family in the restaurant business here that started a chain of restaurants. Worked with them for a while. Got out of that, just did not want to do that long term. Enjoyed it, learned a lot, but started interviewing just like anybody else, sending out paper resumes back then. This was, I think, 99, 2000, and was looking for a sales job. I was a communication major, and someone, actually a friend of mine, referred me to a couple of different financial services firms at the time. And for whatever reason, I did not look into that, even though I had my father was in the life insurance industry early in his career. And so I had some family connections. My uncle was in the life insurance industry at one time. So once I got referred into it, I got really, really interested in it. I didn't study finance in college, so I didn't feel like I was qualified. And once I got referred into it, started looking into it, just loved it, and had a couple of different companies that I was deciding between, and chose to start with AXA Advisors in 2000.
Let me interject there real quick. So you, I take it you're Greek, mm-hmm. And you said you had family that was in the restaurant business.
Soccer. I know it's surprising to everybody.
No. Do you mind me asking the question? Were they diners?
No. It's a good. Yeah, My dad was
My
my dad was in the restaurant business, but by the time I was out of college, he was retired. Um, but he had a couple. He was primarily a business owner, and then had restaurants late in his career. But my cousins started a pretty prominent restaurant chain here in Birmingham, and have since sold it a couple of times, and they still have another. I think he's got another 20 or so restaurants going now. So
Wow.
they've opened probably 60, 70 restaurants, maybe more. He'll be mad at me for quoting the wrong number, but it's a large number of restaurants. No diners, not yet.
No, the only reason why I ask you, I grew up with a lot of Greek people. One of my friends, still to this day, his name is Akis Varakis, and his family was in the restaurant business. And I talked to him the other day because growing up, his family owned like 13 diners, and they have 166 now. So
wow. There are a lot of prominent restaurant owners here in Birmingham that are Greek. There's a big food town in Birmingham, and there's a lot of them are Greek owned. And I think that's a pretty common theme. It's just cultural, I think. Greeks like to entertain, and they love food and love to have a good time. So it fits. But yeah, I graduated out. I did my full tour in the restaurant business when I was younger, in high school and in college. And then for a year after college, I was managing one of his restaurants, and that was just not what I wanted to do. But nothing against it. I wanted to work when other people were working, and I didn't want to work nights and weekends. And it's a lot. Restaurant business is extremely difficult. It is not for the meek. That's all I would say.
you were part of that. You were part of that MetLife acquisition.
Mm-hmm.
Interesting.
Yeah.
Yeah. I recently learned a lot more about that. I know MetLife, they had sold off so many different channels from like 2012 all the way through 2016 and 17 that, they had a big mortgage backed security channel and a big mortgage platform. And then they, I know that they got rid of this platform as well. And that's very interesting. So let me ask you this. Were you the founder of LiveOak?
No,
was that?
there are really three of us. If you want to call us founders, we don't really call ourselves founders, but there were three of us that are kind of your primary partners. We haven't titled it, but you could call us founding partners if you wanted to. But three of us that were working together in the same office, that were on a team together, and it was more loosely done. We had some succession agreements between the three of us. We did a lot of joint work between the three of us. We're in the same office. All three of us are friends. So we formed a team. And then last year in earnest, we started consolidating back office operations, branding. That's where we came up with the LiveOak Group. We're building our website out right now. I haven't even finished that yet. But we consolidated pretty much everything. We're trying to consolidate everything that we're doing into a system, if that makes any sense, and trying to use one system. There were three of us doing three different systems, being successful. All three of us were doing quite well. And so we just felt like 1 + 1 + 1 would equal 5 rather than, 3. And we just felt like we could be more successful and serve more clients and do a better job for our clients. And our client outcomes would be better if we worked together rather than apart. That's really why we did it.
And how many total people do you guys have on your team now? It's you and the two, I guess, partners there.
Yeah.
And then how many total people there?
So we had two more partners, Chris Towns and Patrick Towns. And I should mention John Hunt and James Graham are the two. Myself, John Hunt, and James Graham are the three kind of primary partners. Chris Towns and Patrick Towns are also partners. They are CPAs, and they are partners with us as well. I was partnered with them to begin with. I've been working with them since 2003. So I've been helping provide financial planning to their clients for a long time. So we were longtime partners. So I sort of brought them to the table, if that makes any sense. And then we have two practice managers that primarily work in operations. And then we have a receptionist.
So a total of 8 or 9 of you?
There are 8 of us, I guess. Yeah. 5 producers or 5 advisors and 3 operational type people.
Awesome.
Both of our practice managers, to be fair, were advisors. And So both of them were licensed. One of them is still fully licensed today. Anna and Weston have been instrumental in our growth and still continue to be. But both of them were advisors, so it's been extremely helpful to have people that are quote unquote in support or in operations that have been an advisor and can walk, understand what we're talking about and know what it's like to sit in front of a client and understand the solutions and some of the strategies that we use rather than just trying to learn it on the go, if that makes any sense.
Mm-hmm. And you talk a little bit about your growth there. Has your team's growth just been, primary organic growth? Can you tell us a little bit about how you and your partners there have, achieved to where you are right now?
To this point, all of our growth has come, I guess you would call it organically. We haven't done any purchases or buyouts. We've done a lot. We've had pretty explosive growth over the last probably 5 years, like a lot of advisors. Some of it's market driven. Some of it is, I can't even tell you. We've done it. Most of it's through referrals, what I would call social prospecting, networking, personal observation, friends, family, that's so on. But we've had pretty extensive discussions with multiple other advisors, both externally and internally, to potentially either do a buyout or join the team. We just haven't added anyone yet, but we've had pretty extensive discussions with some folks, like I said, internally and externally. But all of our growth to this point has been organic, just done by us.
With the, ultimately what we're seeing in our industry is it's interesting what we're seeing in this industry, right? Personally, is one of the things that attracted me to this industry is because there's, I guess, haven't been in Ashley and I, we were previously in the mortgage business for several years before getting into private equity. And I had a friend that had been in wealth management. And so what had attracted me to this industry was, that it wasn't so cyclical. And, things just, when they go on, they go on. And when you take a look at the market, over a very long period of time, the market's always like this, right? And so I think I really like that because, when you take a look at other markets, they are really, like kind of
business.
Yeah. Like a penny stock almost. Right.
Mortgage business is a tough business. It's just so interest rate dependent. You have boom and bust. And not that I know everything about the mortgage business. I have one really good friend. I have several good friends in the mortgage business. One that really rode the wave and all the way through 2008, and now he's in a completely different business. But it just, it's hard for us. It's much more consistent. It is market. I mean, market affects us. Believe me, in 2008, it affected us. 2000, 2001, 2002, that was not a lot of fun. But yeah, it is much, and the recurring revenue is huge. Again, I don't know everything about the mortgage business, but
I'll tell you this, what we were is we bought mortgage-backed securities, right? So if the interest rates went down, it was actually a really bad thing for us.
Got you.
So we would get what's called like portfolio runoff when interest rates went down.
Yeah.
So even though we had a team of like 400 loan officers that attacked the portfolio when it even moved 0.25%, it was interesting because the point of origination is where everybody goes, right? So they would go back to the loan officer because we would buy a lot of closed loans.
Yeah.
We'd go to other mortgage banks and buy $1 billion, $2 billion of closed loans. And, ultimately that was our business model. Oh man, it was when COVID hit, it was brutal. I mean, we had 40 billion in the portfolio. And I remember one day we got $1 billion of payoffs in, like people wanting to pay off their mortgage, right?
We don't have that kind of volatility in our side of the business. Meaning COVID was pretty crazy for client assets. Market went down 30% in a span of like a month and a half. I mean, we have some wild, not like that wild swings, but we have swing and our income and our revenue is obviously tied to those assets. So that's the biggest change in our industry since I started last 25 years is margins have shrunk, but everything is geared toward recurring revenue, the fee-based side of the business. And it's good for us once you're in the business. It's just hard to get into it because you have to build a significant amount of assets to really, have enough compensation to pay your bills. But once you have some scale, it's a much smoother ride. And then what ends up happening when you have crazy markets, even though our clients are getting hurt, our assets under management gets hurt, our revenue gets hurt, we take on a lot of other assets because clients, go figure, get unhappy with their current advisors, whether they're not calling them or communicating with them enough. And so a lot of times we can take on those assets during those times, because when times are good, people don't move anything because they're happy. So it's
Right.
weird. You have these ups and downs, but it's nothing like the mortgage business. Sometimes the downs actually help us. Like, for instance, COVID was probably one of the better years I've had in terms of asset gathering and new money, and even with our existing clients. So it's hard to explain if you're not in it. It's kind of like playing a poker game and you got your stack of chips. If you lose, the market goes down, you lose some of your chips, but you might win some pots when the market's down. And so you can kind of refill your stack. And then if the market rallies again, now your stack multiplies
It's
quicker.
much bigger. Well, let me ask you this though. What about this most recent situation that happened with the tariffs, right? I mean, in some cases, I would say, when you take a look at, look, I don't think the market quite went down 30%, but you take a look at things.
Wild couple of weeks there.
Yeah.
It's the way I feel like in general, our business is about communicating with people. So most clients, if you've done a good job of managing their expectations and understanding when they should be investing for the long term and when they should be setting money aside in something safe, they realize that there's going to be years where the market's going to be volatile or down even. And we try to coach them up. If there's 1 in every 4 years, you should expect a downturn, because that's the average. Going back 100 years, I think there's like 74 up years and 26 down years or something like that. So I went to Auburn. I'm not that smart. 1 in every 4 years, you should expect a downturn. So a lot of times when you have volatility like you had in the last couple of months, most people understand that that's going to happen, but people get scared. And that's where we come in. You got to call people, communicate, be available. And a lot of times the way we explained it was, we're playing a game, investing is a game, or money is money. I guess capital flows based on a game, and the rules of the game changed drastically. And then they still haven't finalized those rules. So it's a lot of moving goalposts. It's like if you're betting on football games, it's hard to bet on the game when you don't even know who the quarterback's going to be or what the rules are going to be. So I think it was more uncertainty than anything.
Yeah. And let's talk a little bit about your vision for your team over there. Things have been primarily organic. What do you and your partners, vision for your team over at LiveOak for the next 3 to 5 years? Any big plans in the horizon? You just did the restructuring of everything to come.
Yeah. So in the next 3 to 5 years, we plan to double our assets, double our revenue. We plan to do that organically. And the way we're going to do that is improving if you can imagine a funnel, our business is kind of about a funnel. You got new people that you are talking to about becoming clients. And then you have your existing clients. And if you imagine the front end of the funnel and the back end of the funnel, that's where you kind of spend a lot of time. And you can spend a lot of time servicing. And so if we can improve our systems and improve how we handle our business and how we treat our clients, and if we can do that in one consistent manner, we can serve more people. And all three of us were running into kind of capacity issues where we were running into our own kind of glass ceiling just in terms of capacity. And so with more support, better systems, there were a lot of things we were all three of us were doing for our own clients that we can do one time now rather than 3 times. So we feel confident that we can at least double in the next 3 to 5 years, just from sheer capacity. We have more capacity now. And then you throw in the branding, the marketing, the extra support. It's, aside from that, we do plan and consider adding other people to the team, both in support roles or in operational roles, and possibly another, senior level partner or multiple partners. Like I said, we've had multiple conversations, but we're not in a hurry to do that. That's not like, it's not in our, next 12 months, we need to add another person. I think if we find the right person, then we might do something like that. Just the three of us get along on a pretty good level. I respect and admire both, really, John and James, but of course, Chris and Patrick. I've been working with them for a long time. So I know how they think. They know how I think, and vice versa. We approach the business similarly. We handle business similarly. So it's hard to bring somebody on just because they produce X, Y, or Z. It just, I know these guys and I trust them, and we're not just going to throw somebody in here just for the fun of it. So I hope that makes some sense. Our plan is to grow our current team and grow our production, our revenue, and grow our profitability and serve more clients, serve them better. And if somebody else comes along that fits kind of what we're trying to do, then we might add them, might not. And that might accelerate growth even quicker.
Right.
Yeah. Not all volume's the right volume,
It's a lot of truth to that. You get into a conversation the other day with one of the guys in our firm that's out of our Franklin office, and they're killing it. And you start bumping into capacity issues. Like, do you really need more? I mean, we need more. We want more, but I mean, your clients can suffer at a certain point. Where if you bring on bigger and bigger clients, the clients that started with you can get neglected, and we don't want to do that. We want to provide a strong service to the people that have been with us, and we spend a lot of time on service model, like a lot, and we're still spending a ton of time on that. To provide the right level of service to the people that it's what they expect and what they deserve, really. So that's what we're trying to do. And if you do that well, they introduce you to other people. I mean, the business is really not that complicated. It's just not. I mean, once you have some scale, and if you treat people right, and you return their phone calls in a timely manner, and you're available, and when you sit in a meeting with them, you don't rush them. If you just treat people like you want to be treated, and try to communicate complicated things and make it easy for them to understand and easy for them to make a decision, they'll introduce you to other people just like them. So that's sort of our business model at this point. We've tried every other trick in the book, but that's primarily what, especially John and I. James does some other stuff, but it's mostly referrals, word of mouth, that type of thing at this point.
And
I'll tell you this real quick. I remember there was years ago when I think it was 2013. My brother and I, we added this guy to our roster. Kind of like a financial advisor, but kind of in the mortgage world. And this guy, we had 9 sales. We had 9. We'd call them, if they were financial advisors in your world, they would be called account executives in our world.
Yep.
And this guy, probably doubled the production of all the other 9 guys together, and got them to work hard too. And he was such a blessing to have right on our team. And he's probably going to watch the podcast, so I can't say his name, but he'll know that I'm referring to him. But this guy, I'll tell you this. I mean, he brought in about $2 million a month of revenue.
Wow.
And he was, in his compensation was about 15% of that, right? Wow. So he was doing really well, and he grew up a very wealthy fellow too, right? But I'll tell you this, about a year into it, I mean, what he was doing to get that volume in was just going against every core value of the organization. Lots of people wanted to quit from him. We had, operational people that were just resigning left and right. And then, ultimately, it was just constantly having to sit down with him and having to say, hey, listen, man, we have pressed the boundaries on many different occasions. We can't keep doing this. Right. And ultimately, for better or for worse, we had to part ways. And it took us about 3 years to regain that volume again. Right.
It just is non-negotiable for us. We don't want that to happen. First off, we're in a smaller office in terms of the strategic financial partners office or the firm itself, and you throw one bad person in that mix, it just ruins it. Right now, we bicker and argue about things, but I trust those guys. Like if I drop dead, I want my wife to go see them. I mean, that's the level of trust that we have, and I don't want to jeopardize that. Same thing, with Chris and Patrick, great guys, and that's why Chris and I have worked together for so long. I know how he thinks. He kind of knows how I think. We agree on most things. When you throw somebody else into that, it's like it better work, because then how do you get them out of there? That's why we've definitely had some deep conversations, but nothing's come about yet that has made sense, and we are trying to avoid the exact scenario that you just described.
Yeah.
It's not worth it. It's just not.
Finding that.
Yeah. Put it this way: if you average it out, the slower run would have been more beneficial to us, right?
Mention any potential compliance problems. Like I'm not worried about what any of my partners are considering doing with their clients at all. I have zero concern about any of that, and I don't want to go to work worrying about like what some loose cannon is going to do and get us all in trouble. No thanks.
Mhm.
Pass.
Right.
But yeah, it's hard when they come in and make produce results. It's like, wow, that's awesome, and then you discover how they're doing it. Then what?
Right.
I've had it happen. I've had it as when I was running the office. I've dealt with a very similar issues in the past. So it's not fun.
Mm-hmm.
Yeah.
And shifting gears a bit, Dino, there's so much going on in the industry. I feel like it's ever evolving. So many different trends coming into play there. What industry trends do you really see playing out that really people should pay attention in your perspective and will be shaping the future of this industry?
We're on this call talking about teaming, talking about the story that I personally went through and our team has gone through. And I think one of the biggest trends or one of the most impactful trends is teaming. Now, teaming's been around for a while, and advisors getting together on teams, forming RIAs, which I know you guys have interviewed quite a few of those folks. The way the business is structured and the way technology, and I'll go ahead and mention AI along with everybody else, it's accelerating so quickly, and we're able to do what we do quicker and easier than we ever could. And we can do more, right? So why not do more? And when you have more people and more scale, you need more organization to help do that. And that's where kind of teaming comes in. And the other thing is succession. We built really significant businesses. And if we double that in the next 3 to 5 years, that's double of a significant business. And if you haven't built a structure or an organization to support that business and it's ongoing, whereas, 25 years ago, financial advisors' business were not really ongoing in terms of the advisor dropped dead, the revenue would cease because it was mostly transaction based. Like you had to do something to get the revenue. Today, that's not the case for the most part. And, if it's just, it wouldn't be the right thing for the clients for us to not build a succession and build an organization that would continue without any of us. And so that's where I think teaming is a huge thing now, and it will continue to be. And I think AI / technology is going to, my personal opinion, here's my hot take for the day, is I don't think a lot of people think AI is going to replace financial advisors.
No way.
They're going to replace. I don't believe so. Now, it might replace some of them. I think there'll probably be less of us, but a person, just like we're on this call right now talking to each other, would you really want to be talking to an AI? Like, and they're quoting stuff that they learned from the internet? I think you're going to want a person to decipher what AI may be saying, almost like translation. And so I think what AI will do is enhance us or enhance me as an advisor and hopefully make me better, quicker, more efficient, be able to serve more people and do it in a more efficient and do it better, right? I'm sure I can learn something from an AI that knows everything, So I feel like it's going to be another stool, if you will, that's going to be a support mechanism for us. How that's going to actually look, I really couldn't tell you at this point, but that's my thought is it's going to be an enhancement to good advisors already, because I think humans want to talk to another human occasionally. You want to sit down with somebody and have a conversation. If you're considering, let's say you're considering quitting work, and it seems simple, but like it's a pretty big decision. If you're not sure whether you should or could, and you go quit work and then you need to go back to work, that's not a simple thing. Or you're considering selling your business, or you're considering what would happen if you died and you have too much assets, and what are estate taxes going to do to you. I mean, these are like complicated subjects. And do you really want to just Google search that? No. You might want a bunch of Google searches and then somebody to decipher all that. And that's where I think better advisors will be enhanced. And I think average to new advisors is going to be harder and harder to come in, because you're going to be competing with AI on that level. I don't know if it makes any sense, but to me, that's what I think the future holds. So I think bigger, more organized teams within our industry and or independent RIAs or independent offices. And then I think you're going to see AI enhance what we can do to provide quicker and better advice and services for our clients. That's what I hope happens.
Yeah.
And I think you're absolutely right there, Dino, because, Ashley and I, we use AI quite a bit. We've been using artificial intelligence probably since we started working, we've been working together for close to 8 years, and we had a couple-year gap when I had sold my last company. And I could tell you that for the past 2.5 years, we've been using AI, and whatever new comes, to the market with AI, we utilize. And I can tell you the biggest problem that it has is for the first several months, and AI is going to do two things. It's either going to make you, and I don't mean to use a slang term, but up your own game, right?
Yeah.
It's going to make you a better version into who you are, and allow you to work not just hard, but smart as well. The smarter and harder method. But as well, what it does to a lot of people is it makes them lazy, right? Yeah. And AI is not it's not accurate, right? We've had so many instances, because whenever we pioneer anything, I could tell you, we have to double check the work, so it's double or triple the work that it usually is for the first 5 or 6 months. Right. And so ultimately, a lot of people, they rely on AI and they send out these multiple email blasts or what have you. And then little do they know, ultimately people know it's AI, but the reason why they don't get a response is because AI will have the wrong name, the wrong company name, the wrong first name. It has just the wrong information all the way around. And it doesn't do it on every single one of them, which if it did it on every single one of them, that'd be great, because then, it has a problem. It just picks and selects which ones it does, which ones it messes up on. So I think at the end of the day, it's going to make like anything else, it's going to make the strong stronger, and it's going to make the lazy people have to maybe shut their practices down and go work for individuals like yourself.
I couldn't agree more. I mean, it's just like if you're, as an individual, if you go Google search the answer to something and you think you have found what is the answer, sometimes you're wrong. And
right.
I'm sorry, AI does the same thing. I use AI and have used it extensively for certain things. Sometimes I'll do searches, just a quick search, like if I'm looking for a certain tax code or something. And I have found mistakes, right? Where it's like, here's the answer. And like, that's not the answer, so it will get better. AI will get better. I mean, I saw something yesterday by the NVIDIA CEO where he was showing I don't even want to know what to call it, but it was like a chain thing that connected a bunch of GPUs, and it was talking about it could handle the traffic of the entire internet. Like it could, and you start thinking of, if that's powering AI, how quickly it can get better, just like I think a human can get better. But, I don't, maybe we'll be proven wrong, but I agree with you. I feel like I said, I think you're going to need humans that can decipher what AI says and be able to Because is AI going to be able to convince someone to do the right thing? I think that's partly what we do as advisors still is, I can describe what is best for a client, but that doesn't mean they want to do it. So half my day sometimes is just convincing people to do what they should do because they want to do it, not because I want them to do it. Just because I tell them to do it. Just like my doctor tells me I need to exercise. I don't exercise as much as I should. I just don't. But I know it's best for me, and the doctor knows it's best for me, but it doesn't mean I'm going to do it. So sometimes I think a good advisor convinces people to do what they should be doing. And I think that's probably where we add the most value to people, is getting them to do what they should do.
Absolutely. Well, Dino, I think that's a perfect note to end our conversation today. It looks like we're coming up here on time, but thank you so much for joining us again, sharing your insights, your knowledge, your perspective with us and our audience. It's been an absolute pleasure having you on the show.
Thank you so much for the invite to be on the show, Mike and Ashley, and really enjoyed it. And talk to you guys later.
Thanks, Dino. And to our listeners, thanks for tuning in to another episode of the What Matters podcast. Be sure to join us next time as we continue to explore topics that truly matter. Until then, take care and stay curious, everyone. Thank you.